Hey everyone, welcome back to CryptoCache. Thanks again for joining me here. I hope you're having a fantastic day. Quick look again here at Bitcoin, seeing what's going on. We're going to double check a few important factors here today, mostly just referencing the larger time frames and kind of understanding the macro perspective here in general. While we can't look at the monthly closure because we're not there yet, we're getting pretty close, right? We're going to close on a weekend. So having said that, we'll take a look at some important stuff here today and obviously jump into the backend data. If you are new to the channel, just to ask, go ahead and hit the like button, comment below. And if you've been watching for a while, deeply appreciate it. Do the same thing. All right, so taking a look here at Bitcoin, big picture, not a whole lot going on here, right? We're smack dab in the middle of a lot of liquidation. There's slightly more liquidation on the upside than the downside based on the last 7 days of trading. We look at the monthly, roughly the same scenario here too as well. Starting to see some accumulation above and below, but nothing too crazy. While it is a decent amount of liquidation, every red line here we see is roughly $1 billion. That's kind of par for the course. That's very standard because of just how high liquidation levels get when people start using large amounts of liquidation, okay? Generally speaking though, 60,000 is the low number and 62,500 is the high number. We're really close to the middle of that, okay? So nothing super crazy with liquidation on Bitcoin. Let's take a quick look at the daily and kind of see where we're at here. Quickly to note, moving averages. We are still down below all three moving averages and above the 200. Let's actually go ahead and do a bird's eye view here. Again, I'll do a deeper dive, but I got some community members asking me to kind of look at the macro here for this coin and just generally understand where we're at. Because when we look at the macro, first of all, we want to look at the right time frame. Okay, so this chart here that I have, this is Bitstamp. This is the oldest chart you can find. Gives you the best amount of moving averages and just some realistic data for large term time frames with moving averages. Okay, so if we look at the monthly here, let's quickly understand here. First of all, we do still have somewhat of a bull flag pattern, right? So the likelihood of breaking up then down is still quite high in my personal opinion, based on, well, most things. Honestly, there's a lot of support levels just below the price action, and just the overall sentiment here. It seems very unlikely that Bitcoin's going to come down much further. Again, I could be wrong. I hope I'm wrong. Honestly, I have limit orders set all the way down to 50K. Not because I feel like we're going to see 50K, but just as a precaution. Again, that's just generally how I am as a spot holder for Bitcoin, okay? Now, when it comes to moving averages, we're overall moving averages here, which is standard. That's good. We obviously want to be above them. Does imply, though, we have more room for downside being so far away from, right? We also kind of note here as well on the monthly that stochastic swinging down. Okay, that's been swinging down for a little while, just letting us know momentum has shifted down. But we are over 50 and under 70 in the RSI. That's generally speaking a very favorable place to be. Doesn't mean there isn't a bottom in place. It just implies that the price action is in a good range to not effectively have any consideration to be rejected. What I mean by that is, we're not close to 70 specifically or above it, so we're not overextended any longer. That's a good sign. But money flow index is pulling back and MACD is somewhat diverging here or losing momentum. So again, I don't necessarily think that MACD is always going to just go up and down every time, but generally speaking at this point, since we are on the upflow, there is potential for further downside based on that sentiment. But the longer we stay in this range, the more likely we are to break up then down, because of the simple fact that these indicators are cooling off and the price hasn't pulled back dramatically, okay? Now, again, it has dramatically pulled back if you consider 70,000 to 60,000 in a short amount of time. That's very realistic. But if we take a look at the weekly here, let's reference a few things. First of all, we're over 50 on the RSI, generally a favorable sign. Stochastic is swinging down, but that's par for the course. That's standard. Like basically letting us know here that we are due for a correction to the upside here relatively soon. We can also see MACD diverging too. And if you look here in the previous weeks, in the downtrends here for the most recent time frame, from July all the way to October, we saw a downtrend. So that's 1, 2, 3. It's roughly 3 months of bearish divergence on the MACD. Okay, we got 1, 2, 3. We're roughly 2 months into this divergence right now. Okay, so to give you perspective, we have hypothetically 1 more month worth of divergence according to the MACD. Is that an exact science? Definitely not, but it is something to note. We are also under the 20-day SMA on the weekly, which implies we've broken free from this ascending trend, which also implies the price action could continue further down. However, again, we're still working within this range on this bull flag on either the monthly or the weekly, depending on how you look at it, and we're still in good shape. We tested that lower level there at about 58.5, so honestly, anything much further down below could spell further continuation. But generally speaking, at this point here, we can see that we're still in good shape. Me personally, being above the 50-day SMA is the most important thing. The 20 just kind of lets us know we got to be careful, all right? So again, the weekly time frame is not that terrible. it's really looking pretty decent in the overall sense. So to me personally, you combine those two things together, the macro still looks decent, but we cannot fool ourselves. We need to recognize that there is still potential for downtrend. However, you got to recognize also too in the back end that there is just a tremendous amount of buying pressure every time we get closer to 60,000. And even previous, when we look at, if you're excluding fundamental catalysts, we can see there's tremendous amount of buying pressure from a lot of different investor types, right? MicroStrategy, for example, they buy every single dip. So I doubt they're doing that just to sell every single top. But again, that's market makers 101, right? So again, they buy and they sell as they please. So the truth here is that daily, weekly, monthly timeframes are not that terrible. I misspoke though, however, the daily is looking a little different. Let's talk about that as a matter of fact, because when it comes to the daily time frame, just recognizing a few things is important. So let's go ahead and shift gears to our regular chart here and kind of see what's up. Okay, so here's the thing we want to recognize. First of all, we got MACD swinging up a little bit, right? So we're losing momentum on the downside, letting us know that we've been maxed out for a while. This is a pretty significantly long divergence, right? Once again, we've been diverging for probably about 20 days now. Okay, so it's not healthy to overextend that. And we have been overextended for within reason, right? If we take a look at TD sequential, we hit a 9 on TD sequential and hit probably another 9 after that. So we've probably been moving about 18 candles down in the last 2.5 to 3 weeks, okay? So that's not good. However, once you get closer to 30 on the RSI, which we haven't seen in quite some time, the likelihood of the price action recovery is quite high. So to me personally, the daily time frame, that in combination with stochastic and the MACD losing momentum, there's a lot of reasons why I feel like the price is starting to bottom out and that we probably shouldn't see too much lower. Again, a retest of the 58.5, perhaps. We may even see a retest of the 56.4. Okay, those are previous lows here. These are all-time lows within the last 3 months, right? So those are two areas that we just want to pay attention to. That's exactly why we have lines on the chart, just to recognize that those are key level supports. So a good buying location would be 58,600 as a rough estimate. In case the price wicks down, you get filled, right? That's generally the concept there. So anyways, the daily time frame here, while it's not looking great, we're still below most moving averages. We want to be back above this descending trend line before we have any leg to stand on. We're still in pretty solid shape here, all things considered, if you look at the other momentous type of indicators, okay? 4-hour time frame, let's quickly note here, 4-hour time frame has been looking kind of, I wouldn't say bearish, but it's not bullish. And what I mean by that is being back under above 50 is what we're looking for. We're not there yet. Stochastic swinging up, we're starting to top out there. Unless we get a second stochastic swing to the upside, push us through 50, we're more than likely going to continue to be either range bound between this range of 59.9 and 61.1, or just essentially in a position where the price action slowly tapers off. So MACD is converging here. That's all well and good. It's starting to lose momentum too. Me personally, when I see all these things kind of combining together, I don't really love trading into it, all right? The truth is here, we're right there at the 20-day SMA as well, and the 50-day SMA is running concurrent with this descending trend. Until we're over 50 on the RSI and above 50 on the simple moving average, I really don't think there's any cause for excitement or any specific warranted long position with Bitcoin. I'm not saying you should short though either, because these are not all divergences that are fully bearish. It's just that we are still exuding bearish qualities, so it might be best to presume the price could pull back. Okay. Again, that's generally the concept. Until you confirm bullish behavior, you generally want to kind of stick on the sidelines and wait. All right. So at that point here, right now, take a look at the hourly. Let's reference this here and call it a day. We can see we are underneath the cloud still, so that's generally bearish, but we can see also lagging span is intersecting with the price action. That is construed as a do not take a short position and consider closing your short in profit. Same thing here as well. Conversion line and the lagging span, conversion line and the baseline, they are both intersecting, letting us know the shift in momentum is occurring, likely to the upside. Again, it's too early to tell, but generally speaking, we're seeing that shift on the hourly to breaking that descending trend. However, we're not there yet, right? We want to at the very least be here above 61,200 to be able to have any kind of consideration for the price going up further. So me personally, I would think waiting until we get a solid closure above 62,000, just as a round number, would be a good consideration, and that will likely come within the next 48 hours. So hypothetically, Monday market opens up and Asia doesn't destroy the entire market as before we wake up. We can see here 61,800, anywhere above this descending trend line should be a pretty safe place. Again, we want to confirm. We don't just want to blindly jump in because we've seen so many false positives with Bitcoin. It's not even funny, so I would be very careful. However, at that point, that's going to be a solid, better consideration for a long position. Between now and then, I would say it's best to expect range-bound activity somewhere as low as 59.2, upwards of about 62K. That's a bit of a wide range, but we're roughly in that range right now, and there's not much we can do about it until it breaks either up or down. Okay, that's generally what we're looking at there. All right, so hopefully that made sense. I described that correctly. Thanks again so much for the feedback from my community members here. And some folks I know, they've been a little impatient and or just frustrated with the lack of consistency. But I don't know if you noticed the market, but it's full of inconsistencies right now. And I'm not making excuses at all, but I'm just telling you that it's important to recognize that being patient in this market is paramount. And if you're not finding the results you're looking for, slow down, take less trades, maybe evaluate things a little more, and perhaps even take a little break. It's perfectly fine. I've done that many times in the past myself. I still do it intermittently throughout the week. So please just do yourself a favor and don't become your own worst enemy. All right, folks, I hope you learned something again. Thanks so much for watching. Don't forget to like the video, comment below if you get a chance. Join us over on Twitter, Telegram, Discord, YouTube, TikTok, whatever floats your boat, it's all there. I appreciate you folks. Thanks again for your time. We'll see you soon.